As much as I love my ETF investing, if there was one stock that I would have put money into, it would have been Nvidia. Now that of course wasn't on everybody's radar, especially looking back to September of 2022. Jim Cramer was shorting Nvidia, citing that the Ethereum merger was coming and there was going to be absolutely no need for the graphics cards that Nvidia was developing back in 2022. Then Nvidia went on 2023 and had the #1 stock pick of the entire year. But what would have happened if you would have invested $1,000 back in 2022 when Cramer was shorting this stock? You would have been up a record-breaking 490% from the time that he did this. Now, of course, this was September 19th of 2022. You would have purchased 7.5 shares of Nvidia at that point for the $1,000 that you invested. Fast forward to today's, it would be worth almost $6,000 with, again, a 490% gain over 17 months, which is incredible to see. Now, of course, in today's video, we're going to be looking at our stock portfolio, breaking it down a little bit further, and I'm going to show you in the ETFs that I possess, we do have a good chunk of Nvidia in there, and also for a very short amount of time, Nvidia was over $2 trillion in the market cap. Now, a lot of people have also said that when it comes to AI, when it comes to technology, when it comes to EV, and everything that kind of Nvidia is involved in, we're going to see a solid growth out of this for the next 3 to 5 years, which could be super interesting to see exactly where this lands with the build and with Nvidia in general. Now, looking at our stock portfolio, I'm going to go ahead and bring it up and we're going to swap this over. And we'll take a look at our debt-free journey. And of course, breaking this down, I want to show you kind of the breakdown of what I'm seeing and what I'm kind of seeing in here. Now, of course, we were at about 95,000 right here, but looking at our market gain, we are 14,855, and we have broken that 60% money weighted return, which we see right down here. But looking at the breakdown of what we have now, this, of course, when we're looking at our ETFs themselves, the breakdown in here is very solid. And of course, a lot of this growth is coming from Nvidia and some of the other companies that are really growing. So as we look at the VUG details, or the VUG, the Vanguard Growth Fund, looking down here at its holdings. So these are the biggest holdings, which right here, guys, this is what I wanted to point out is looking at Nvidia, 6.46% of this is held in Nvidia, which of course last year had an absolutely phenomenal year. We're seeing it continue going into 2024 right now. So is it worth buying? In my opinion, when they're talking about the next 3 to 5 years, that we could see a tremendous amount of growth out of the AI sector, which we know they are very heavily vested in. But then we talk about overlap. When I look at the S&P 500, even looking at our VOO, again, the overlap in here, this one actually holds, as you can see, Nvidia 3.73% in this one, Microsoft a big chunk there, and also looking kind of the build of the percentages that we carry with these 500 ETF S&P 500 stocks that we have. Now, of course, when you start breaking it down again a little bit further, you break it into the QQQM, which of course is the NASDAQ, but we break this down a little bit further. Looking right down here, that's right, we have Microsoft again, we have Nvidia again, Meta, Tesla. So you can see it is kind of a very similar breakdown to what we have with our other portfolio funds. And then the final one that I do carry in this portfolio, of course, is the SCHD. Now, this one is the one that has kind of been bringing, as you can see the percentage-wise here, that has kind of been bringing everything down. But the SCHD is kind of by design because, of course, this 3.41% dividend yield is going to be huge with the limit of the market fluctuation. Now, we know, again, 2023 was huge. Going into 24 is going to be big. And as we've been doing our debt-free journey and putting the $1,000 in here a week, you can also see down here that these are kind of one in their own. So we have an entirely different breakout from this than what we're seeing with the other ETFs that we have. But again, when you think of risk mitigation and when you think of that factor, we're building it out to really mitigate the risk that we're seeing in here. And the reason, even though there is some overlay, is with some of those, we are covered in their entirety. And I did cover a video about the 2 Vanguard funds that I do hold. But overall, when you look at the VUG, we have 208 companies that we're holding. When you look at the VOO, we are focused on 500. The NASDAQ has the 100 for the ETFs. And then of course, again, that Charles Schwab, that equity dividend rate down here. Now, of course, we have this set for the 4 buys that we're going to get tomorrow. Now, this is going to rebalance the portfolio. As you can see, the SCHD is a little bit underperforming, where the VUG is just absolutely crushing it. So putting in $1,000.02, this is going to be the breakdown that we're purchasing tomorrow. Now, remember, we're trying to hit that 100,000 mark, and right now we're at 94.8 with what we have slated. So we'll be at 95.8, almost 96,000, which we are definitely getting there with the portfolio. So the breakdown, when it comes to our spreadsheet right here, we started tracking this on November 13th. Now we're back all the way up to February 26th. So we got about 4 months of a run rate. We put in 16 right there, but again, we have broke this 60% return, which is kind of crazy. Even looking at the cash flow for where we're at, market gains are almost 15,000, which we peaked a little bit over 15 right here. Came down a little bit, which is good, because anytime that the market is in a pullback or we see the market down, that is an absolutely perfect time to buy, which we went to 58, came down to 54 in the previous week. Now it's up to 60. And again, we are purchasing over and over and over. Now looking at where we kind of landed, 1406 is what we're up for the last 7 days. The VOO, of course, doing incredibly well at 12,000 right there, which is kind of crazy. 1,600 of the QQQM. We have 34, which of course, this is the gains that we've had in what we purchased. 3,400 with the VUG and almost 800 with the SCHD. So overall having that. And then of course we sold out of the Bitcoin, which we've seen a lot of fluctuation with the Bitcoin. With the Bitcoin, having that is going to be coming around the corner. It's going to be interesting. Now, number 11, or right here on 115, this was actually the point when we did the rebalance of the portfolio. Now, when we're making our contributions to this portfolio every single week, it is automatically rebalancing, kind of like we were talking about when it comes to that rebalancing aspect. We are seeing that just kind of over and over and over again. Depending what is up, depending what is down, the rebalance is going to be there. But overall, do I think Nvidia is going to be a good buy as of right now? It's interesting because when you look at a lot of the portfolio, they do kind of break it out. And again, we kind of talked about it quite a bit. Is, you know, when Tesla was at $100, it was overvalued. When they said it was 300, when it was 400, they have said the exact same thing with Nvidia. We've seen the exact same thing, you know, with Apple. We've seen it over time and time again. It's not about timing the market. And I cannot stress that enough, guys. The time in the market is going to be the determining factor when you look at the, you know, the VOO, and you're looking at about a 14% growth rate. When you're looking at the VUG, again, you're almost looking at 15% growth rate over the past 10 years. So it's incredibly important that you're investing on a consistent basis. That is the big thing to really take away from this. As we continue our journey, again, we're trying to do this for an entire year. As you can see, we are 16 weeks in, still doing well. Margin investment, little by little, as we go through and we borrow and we repay. But overall with the portfolio, we are completely rocking it. Even seeing here, we were at 65 to 79, but even looking at the market gain itself or the balance, we're from 69 to 94 already in just the last couple months. So, all right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.